All right, and we're live. It's Thursday, August 27th, and we're here on the Entrepreneurs Lawyers podcast. And with me today, I've got our guest, William Talley. He's with Marine Bank and Trust, and we're going to be kind of diving a little bit and talking about commercial lending. So I appreciate you having coming on here, William. I appreciate to have the opportunity to sit down and talk to you a little bit more in detail about what you do.
Absolutely. Thank you so much for having me on.
Yeah, so you want to tell us a little bit about yourself?
Yeah, sure. I'm born and raised here on the Treasure Coast, local guy. So Treasure Coast is near and dear to my heart. Love kind of helping local businesses here in the area, entrepreneurs try to get started and also kind of grow and maintain their business. So I've been in banking for about 20 years now, all locally here on the Treasure Coast. Community banking is really what's near and dear to my heart too. So love working for smaller banks that are able to help out clients.
Yeah, you must be one of the few like me that stuck around and kind of hung out here. Most of the people move away, so props.
Sure.
We've got two of kind over here.
Yeah.
So working at Marine Bank now, do you work with people who are applying for residential mortgages, or what kind of who is your primary audience that you work with?
Sure. Marine Bank is a full service bank. So we have deposit account services. So a typical bank, when you think about banking in general, we have deposit accounts, we have all types of services, banking services. We have all the stuff that the national or regional banks have. We do commercial lending, we do consumer lending, which is auto loans, home equity loans, that sort of thing. And we also do residential mortgages too.
So your niche is just commercial lending, right?
Sure. My primary expertise is in the business banking and commercial lending field.
Okay. And so you're only working with either people who are current business owners or people who are looking to become business owners or dive into that real estate investment area.
Correct.
Presumably. Yeah.
Correct.
Okay.
So anything that is not strictly for consumer purpose type financing, then we throw it on the commercial side, and it's considered a commercial or a business loan if it's not for a consumer type purpose.
Okay. And so for a business owner who's, or for someone who's looking to become a business owner, what is out there? Like, for someone who has absolutely no knowledge about whether it's, buying an office building, or, putting in a loan application to get an office building. If there's a business owner out there who's looking to make that next step, right? And they want to look, for growth, they want to buy their own building. How does someone prepare for that? Because it's pretty overwhelming. You've got so many different factors, income, credit score. There's just so much. So, for someone who's thinking about growth, because we both work with a lot of business owners, and that's really, the point of today's podcast is to get through to people who are business owners in the Treasure Coast area. And it's to give them value and education and help them prosper in their businesses. And so one of the ways of prospering in your business is by taking that it's really a leap, I would say, is taking that leap and buying your office building rather than paying someone else's mortgage. Or, if it's in the investment industry, it's taking that leap and purchasing, an office building and having multiple tenants at the same time. So how in the world do you position yourself from a business aspect in your business, financially? How do you position yourself? Because, well, from what you were telling me when we spoke earlier about it, it's completely different from residential.
Absolutely. So the first thing I would say is try to do a little self-education. That's first and foremost. Generally, when you go into business early on, there's a lot of bumps in the road, right? A lot of lessons learned. And so what you should do really is try to organize yourself up front and surround yourself with people that will give you good advice that you can trust. I always say you need a good attorney, you need a good CPA, you need a good banker, you need a good insurance agent. I mean, those are kind of your four people that you are lean on the most for the most advice. And if you don't have somebody in your side in each one of those industries, you can get yourself kind of tangled up pretty quick.
I say
So
the exact same thing because I help people start, whether it's a corporation or LLC, when I sit down with them and they start to begin to think about what they need is, I talk to them, you need a lawyer in your ball court. That's number one. You need to protect yourself. Secondly, you need to have someone who's a CPA, who's doing your taxes, who's helping you, differ through what's an S corp, what's an LLC tax designation, what's a C corp tax designation. And then I also talk to them about the importance of insurance, because the insurance companies, their purpose is to keep you out of trouble, in the event that trouble ensues. So 100%, on the ball is, that's that preliminary step in making that jump is having those people in place.
sure. Don't forget the bankers now, right? Financial institution is definitely, they can be your best friend. They can help you through a lot of the good times, a lot of the bad times too, right? So
That's why I invited you here, man. That's why I invited
there
you
you go.
here. Yeah, I didn't forget about you.
So yeah, no. So that is, I think a lot of people underestimate the banking and business owner relationship. I think early on, starting off, they don't necessarily think that that's important, but it definitely is good to get to know your financial institution, have contacts, be able to have their cell phone number, have them on speed dial, be able to reach out if they have, if you have questions, stuff that's arising. You should be able to, shoot them an email, shoot them a text, call them on their cell phone. I think that's very important. So
100%. So have you, Marine Bank's a community bank, which I love that aspect. I love, being, having the owner who lives in the area, like that part of dealing with small business people, community banks, that part for me is so important, rather than, going to like a Walmart where who knows where the CEO of Walmart lives. But what's your background? I mean, have you worked for, were you in the larger banks and the corporate banks, or have you kind of always worked for smaller, more community regional banks?
I kind of have a blended background. So I've worked for regional banks in the past, which they definitely have their place. Regional banks, they definitely, there's benefits to those. But I'm a community bank. I'm a little biased to community banks just because they are kind of entrenched, like you say, in the community where, the people that work here, we live here, we play here. You go to the grocery store, you see your customers, right?
Right.
And a smaller community bank is essentially like a small business. The number of employees that we have are probably less than a lot of employees that of businesses that are out here on the Treasure Coast. So there's a little bit of flexibility that goes on there. We're able to make decisions on a more timely basis. We're able to pivot when we need to pivot. So there's a lot of advantages. Not knocking regional banks though. Regional banks definitely have their place in the community too.
For sure. So, you take a new business owner, right? So he sits down, if he does it right, he sits down with a lawyer. He starts his business.
Yes.
Yeah, real smooth in there, yeah.
Yes.
But he opens up his business. Within the first 90 days, if he does it right, he contacts a CPA. He's figuring out what type of tax designation he wants, whether it's S corp, C corp. He's going to treat it as an LLC. So he's making that dive into it. But then on his 2-year goal, let's say, he wants to purchase an office building. A nice office building where then he's not in a position where he's paying someone else's mortgage. So do you start talking to business owners early on in the process, maybe like way before they're even ready? Or is that something that they're more researching and educating themselves online?
There's absolutely that opportunity to talk to people and get set up and kind of put a plan together. Unfortunately, a lot of the times it doesn't happen that way. You get people that they decide they want to do this, and then they come and see you, and they have a contract in their hand, and so
Yeah.
we get that a lot. But there's absolutely, and that was kind of why I preferenced, getting to know your banker up front when you're first starting off, and kind of sit down and talk to them and tell them about your admirations, tell them about your plans and what you want to do, and hopefully they'll be able to help you kind of guide you in the direction and put together some steps to make you succeed and get
But
you.
we see that too. It's interesting. Like people make that jump and they like become contractually bound to purchase a building or purchase a piece of property or whatever it is. And they don't even have their ducks in a row per se, right? They don't have an attorney, you know, and the same thing happens to me. I've got clients who come and they say, you know, I've signed a contract. And then I look at it and I'm like, what did you just do? Like, what are you doing? You know, and so there's like such important critical dates in those contracts, you know, whether it's a financing contingency on the second page, whether it's an inspection period. I mean, there are important dates that are really overlooked. But, you know, something that I see occasionally is, you know, for the financing contingency part about it is maybe they only give themselves 20 days or 15 days, 20 days to secure that financing. And then after 15 or 20 days, they don't have an out anymore of the contract. So, you know, for the people who do come to you already kind of late in the process, do you have that ability to secure, get them pre-approved, you know, 15 to 20 days, or is that a little bit longer of a process commercially speaking?
Generally, commercial is a little bit longer of a process than, say, residential. Residential contracts are generally like a 30-day window. For commercial, we like to say 45 to maybe even 60 days. Give yourself a little time because commercial isn't strictly, when you think about commercial, there's a lot of different types of properties that can go into that bucket.
So what is commercial? Let's just kind of segue off there. Like what does commercial include?
Yeah, so commercial is basically anything not residential, and it could include residential properties. So it can be a lot of different things when you talk about, you know, agricultural related. So think about the zonings. So when you look at the property and it's zoned anything other than residential single family or residential multifamily more than 4 units, then it's commercial.
Okay.
So that's kind of an easy way to kind of look at, hey, what kind of financing am I going to be eligible for? What kind of financing do I need to pursue?
So because a 5-plex, a 6-plex, a gas station. What about industrial type?
That's all. Those are all commercial properties. So that's the easiest way to look at it is if it's zoned residential, single family, or 1 to 4 unit. So quadplex, 2 duplexes, a triplex, those can all be residential investment properties that are financed on the residential side. But anything other than that really is going to be commercial.
So how's the commercial market right now?
Commercial market is actually pretty strong right now. We're seeing a lot of movement. A lot of people want to be in the investment space in resident in commercial. A lot of business owners are, like you're saying, wanting to lock up their place of business. Either their lease is coming due, or the current owner just maybe wants to, you know, get out of the rental industry. So a lot of different things going on here. The economy is good until COVID. COVID has really took a big hit on, you know, the hospitality, the restaurant industry. Those sort of industries are really taking a whack at it. But the other spaces seem to be scooting along pretty good.
Yeah, I mean, I think we're really fortunate, William, to live in such a small community. You know, when I read stats, and I try not to dive too deep into it because there's just so much information out there, and it's like what's true, what's not true, you know. But when I look at it, so many small businesses have closed down. It's unfortunate. I mean, we've got a few local small businesses too that have closed down. But when you compare the amount of small businesses that have closed down in this community versus, say, Orlando or Miami or these bigger, larger epicenters of the COVID virus, we're really, really fortunate where we're kind of almost in a sheltered space here, you know, in a rural area compared with those larger cities. So it's a blessing in that aspect, living in such a small area.
Totally agree. I just want to kind of preference that too, is to say, I'm glad that we were fortunate enough that we weren't impacted as much as those other areas, because as far as, cases and fatalities and that sort of stuff. So, um, I'm glad. Maybe it's our healthcare, the strength of our healthcare here on the Treasure Coast. You got to tip your hat to those workers and the people in that space. But just very fortunate that we didn't get impacted as much as everybody else has so far, anyway.
Yeah, 100, knock on wood, 100%.
Yeah.
So what about, looking at it, because you've been in for 20 years now. So what was the climate commercially, speaking on the lending aspect, a year ago versus today?
I see a little bit of a sense of urgency now, and I'm not sure whether that comes from, we have, the political environment where we're at, if kind of the uncertainty that lies there. Not Maybe it's just the fact that COVID delayed transactions for 45 to 60 days, and now everybody's trying to catch up for what they were trying to do before COVID, and now you have people real time trying to do stuff, so it's kind of double the volume sort of thing. But a year ago it was strong. Right now there's a lot of activity going on.
There's a lot of activity. That's awesome. So talk to me a little bit more. So, if someone wanted to secure a loan, can they do that within the first 2 years of a business, or do they need reported, a reported net income that meets a certain extent, or how is it weighed in terms of an underwriting process, in terms of qualifying for a commercial mortgage? Is it more personal assets, or is it only business assets, or what factors are involved?
Sure. So there's a lot of, there's a lot of questions that you just kind of wrapped into one. Yeah. So what I'd say first and foremost is, for a new business, 2 years is kind of that threshold that is considered new business. That's even by SBA standards. So when you're in that realm, generally it is an SBA loan that you would be looking for, and to kind of give the difference of what an SBA loan does for you is, generally SBA, there's two types of SBA, I should say three. There's a 7A loan, SBA 7A loan, there's a SBA 504 loan, and then there's a SBA Express loan. So you kind of have three different avenues you can go. The most commonly used loan is a 7A loan. And generally those standards are 2 years, that they consider somebody a new business for 2 years. What a SBA 7A loan does for a bank is, it kind of tips the scale for the bank. It gets the bank more comfortable with doing the loan. So SBA is not funding that loan. They're not providing dollars to the bank to give to the business owner. The bank is actually using their own dollars to fund the loan. What the 7A loan does is it provides a guarantee to the bank. So in event of default, so if this loan doesn't work out, then they're able to go back to SBA and recoup some of the loss that the bank would incur should the borrower default.
Got it. So they're kind of just an added security there. It's not that they're not servicing the loan. They're not the money's not coming from SBA. They're just there as kind of like in the background to help, almost like a cosigner. It seems like the same idea as like a cosigner, just in case something goes wrong, they're there. So for the SBA products, are those for, would you say, more high risk consumers? I mean, so is it higher interest rates, or what?
So usually there's three, and that's I'll kind of touch on that. Interest rates, that's a misconceived notion from borrowers, that interest rates are controlled by SBA. That's not necessarily true. The bank controls the interest rates.
Okay.
All right. So that's most borrowers come in and say, hey, what's the SBA rates? Well, there's really no such thing unless you go directly to SBA and obtain funding from SBA. And there's very minimal programs that SBA will actually fund and originate and fund themselves. Like one out there right now is the EIDL loan, the EIDL loan. It's a disaster relief loan that's out there. Right. That's a loan that is administered by the SBA. You have to go directly to SBA and apply for that loan. I cannot do that loan in-house for you here. So
Marine Bank is setting the interest rates for most of the SBA products that are out there. So versus an SBA product versus a non-SBA product, really what boils down the difference? Is there more flexibility because the SBA is backing it, or does that come at an added cost as well?
Yeah, so generally what we say is, you don't put an SBA guarantee on a loan that you typically wouldn't do as a conventional loan, right? There's three kind of things that we hold on to say, hey, should we go SBA with this or not? And it's generally if the borrower has a lack of down payment, because SBA will finance up to 90%. And in general terms, conventional lending, you're going to do 75 to 80% loan to value or loan to cost. SBA will allow you to go up to 90%. So
wow, that's pretty good.
Yeah. So if the borrower wants to save some capital, wants to retain capital within their business, say they want to buy that building and they want to retain as much capital as possible, we can look at SBA financing, go up to 90%. They're able to retain that other 10 or 15% in their business to sustain it. So
I'm reluctant to make the comparison. So if it's nothing alike, correct me if I'm wrong, but are there any similarities between a conventional residential loan and an FHA loan? Because I'm hearing that there's like a lower down payment. I'm hearing it's backed by the government. It seems like you can almost make there's similarities between the two.
They're both government entities that are backing loans, yes.
Right.
And so they're making them more available to more people, right? So FHA generally has a lower down payment. I'm not an expert in residential, so I'm not going to claim to be, but
SBA is lower down payment too, is what you're saying.
Yeah,
so you can purchase a $200,000 commercial building, and you can come to closing with what, $20,000 plus closing costs for a $200,000 commercial building. That's awesome.
Correct.
Yeah, because I think there's a big, for people who don't have in-depth knowledge about the industry like you do, I think that there's a conception out there that you can't walk into an investment property or you can't walk into a commercial property unless you have, 25, 30% down payment. So I think a lot of people hold themselves back from thinking that it's possible, because when you look at a $200,000 investment, that's the difference between 20 grand or what? That's the difference between 50 grand, 60 grand. That's huge.
So let me take this one step farther, Jordan, is on SBA, those are restricted for owner-occupied business owners. So you can't go out and buy an investment property if you want to buy a 20-unit apartment building. You won't be eligible for that. So this is for owner-occupied. If you have a manufacturer, if you have an attorney, an insurance agent, a CPA, or the bicycle shop. That's more for what SBA is for. It's for owner-occupied business purpose type loans. It's not for investments. So,
yeah, that's good clarification. So that's kind of a good segue. So would you say that interest rates are similar to non-SBA products, or do you think that there's a difference in interest rates between the two?
You're going to see a little bit of a rate difference, because generally they are higher risk type loans. They're going to be kind of out of the conventional structure. So you're going to see a little bit of a difference, but you shouldn't see too much of a difference. A point or two difference is probably the match that you should really see. So when I was telling you originally, there's three different things out there for SBA, definitely a down payment is one of them. Time in business, like you're saying, is another one. If you have somebody, even a 2 or 3 year old company, is still a relatively new company in the eyes of the bank. I mean, they have 3 years under their belt, but they're still ramping up. So you don't have a lot of history behind them. So definitely SBA is there for that, to get the bank more comfortable with it. Lack of collateral. So if it's a non-real estate loan and the business is looking for expansion, we can do stuff that way. So we can get into a deal to where we can get a 7A guarantee that's going to help us get over the hump, because they don't have real estate to pledge. They only may have business assets, which would be their inventory and accounts receivable and that sort of thing. So those are the ways that we utilize SBA. It's not for us to make a bad loan.
Right. Yeah, 100. You're helping people who normally wouldn't be able to help. It provides more flexibility. What it seems like it comes down to.
It's an enhancement. We call it a credit enhancement.
Yeah. But looking at it, I mean, are you guys, from a lending aspect, are you diving deep into P&L, profit and loss statements, balance reports at the end of the year? I mean, are you studying what the net income is? So if the net income, if the profits are only paying all the expenses, and there's a net income at the end of the year, is that hard to finance a loan, or does a small business have to be in the positive each year in order to qualify?
Sure. Yeah. So yeah, typically what we do is we like to collect at a minimum 2 years tax returns. So 2 years finalized tax returns, and then we get year-to-date profit and loss and balance sheets, and we'll get a debt schedule from the business. We also get 2 years business, 2 years personal tax returns from the owners too. So anybody 20% or more ownership, they typically will have to provide a personal guarantee on the loan. So we look at small business as the owners, the operators of the small business are the business. If they were a large, publicly traded company with a board of directors and stuff, and the business could survive without one of the principals, then that's a different story. But generally speaking, these small businesses, the owners are the operators, and the business truly couldn't survive without it. So that's why we kind of encompass everybody in that loan discussion. So
as a takeaway, if for people who have an idea, have a goal, maybe it's a year goal, maybe it's a 5-year goal, maybe it's a 10-year goal, what steps, would you say that people should start taking to start planning? Just to kind of wrap things up and as a takeaway, I mean, what we talked about a lot. So in summary, what would be a few pointers for people, if their goal is to buy an investment property, or if it's to buy an office building for their business, what should they be, really, start doing to prepare themselves for the future?
I would say one of the biggest challenges that I have is people don't organize their financial statements soon enough. So a big part is, the serial entrepreneur, they go out and they start a business, and what happens is they bootstrap it, and they get so in depth into this business that they forget to separate personal from business. And now they're intertwined. They have their personal finances and the business finances. And so what I would say is, early on when you're starting, or after you've started and you've decided, hey, this is a venture that I'm going to move forward with, I would start to separate and organize your financials, your financial statements, keep track of your expenses, get QuickBooks, get a software system, get something where you can keep track and keep your stuff up to date, that is easily obtainable, that you can easily print out That's the biggest thing is I think people aren't as organized as they should be when it comes to business.
Cool. So get organized, get those QuickBooks, start putting all the profits in, list the expenses,
Sure.
categorizing the expenses, and really get a good handle on the accounting portion. That's really going to set you up, you're saying, for making that next commercial purchase.
It's exactly. And leverage some of your local community services out there. The Small Business Development Center is a great place to go. They have a lot of assistants out there. They're located right in the Indian River State College. The director there is Tom Kindred. He is a gentleman of the community. He is there to help everybody. They will help you with anything from your business plan to forecasting and budgeting. And this is a free service. And I think it's underutilized. So that's definitely a good resource for anybody out there that maybe doesn't have the financial skills. A lot of people are good at doing what they do, right? That's how they get into business, is they love what they do, and they're passionate about that, but they may not have the financial acumen that they should. So this is a service that can get them up to speed and help them with that.
Yeah, because especially for small business owners, it's not that you're just wearing one hat. You're really wearing 5 or 6 or 7 different hats. So
that's right.
In terms of getting organized for that financial portion, that's an awesome tidbit, and that's something that I didn't know as well. But William, I appreciate you having on, man. Thank you for all your valuable information. And how can people find you?
If you go right on to marinebankandtrust.com, you can find all my information on there. I am in the senior commercial lender here at Marine Bank, and I also manage the SBA department here. So if you need me, you can go right on to marinebankandtrust.com, and all my information's on there.
Awesome, man. Thanks for coming on. I appreciate it, William. Have a great day,
problem.
man. Thank you, everybody, for listening.
Thank you.
All right. See you later.